Hello and welcome to India Market Open. It's the second trading day of the year and it looks like some of the Asian markets have opened up too. Good morning, Niraj. It was very fascinating on what happened yesterday. I wouldn't be concerned because we did make a higher top and a higher low. But between quarter 3 to 3:30, it was so swift and so quick moving. In yesterday's day of trade.
Yeah, HDFC Bank driving that thing on the bank Nifty, Samina. But, you know, and as we discussed yesterday as well, maybe it was par for the course, something like this. And most people haven't made too much of it.
And I think volumes are also fairly light, right? So there's nothing really to be concerned about. Healthy profit taking. We've been talking about it for a few weeks now. So I think...
Samina is happy that that's happened.
No, only because I feel like if you consolidate and then move up, it sort of gives it a little more... You know, you're a little more confident, if that makes sense. You seem disappointed.
No, not at all. I'm cool with it. It's okay. Par for the course. Par for the course, right?
Yeah. So very quickly, I'll take you through the global cues as well this morning. It's quiet across most parts of Asia. Remember, very few markets have come back to trade across Asian equity markets. China is one market that's trading flat to slightly lower. So again, this market has been a huge underperformer in 2023. Not much relief expected for Chinese equity markets this morning. They had some economic data which showed contraction in the manufacturing sector. And I remember that's been the trend over the last few quarters, but no relief on manufacturing just yet for China. Japan is one market I want to quickly mention. Those markets are closed and will only open for trade on the 4th of January. But I'm very unfortunate. Last evening, which is Japanese time, and of course afternoon for India, Japan was hit by a pretty lethal earthquake followed by a tsunami, some disruption, not too many lives lost, but nevertheless worth a mention. Japan, remember, has also been one of the best performing Asian markets in 2023. The Nikkei itself is up 28%, making it the best market for Asia. Apart from that, like I said, most markets remain closed. Couple of important data points that you will watch out for in Asia. You've got factory output from the S&P Globe for China, Australia and South Korea. And Singapore will be reporting its fourth quarter GDP data. So those are a few cues we are tracking. Wall Street doesn't come back to trade till later today, which also means that Dow Futures, Nasdaq and S&P are all trading flat. We aren't anticipating too much in terms of volumes for global markets either, because you're just coming back to work for a lot of those global countries. Apart from that, oil continues to inch closer to $80 a barrel. Around 78 is what we have the reading on crude, largely on back of pressures and pressure around the Red Sea. So crude will be on the radar. It's a factor we're watching out for. And Niraj, crude, not just globally, but it's such an important trigger point for what happens with Indian equities as well going forward. Apart from earnings, the other joker in the pack will be crude.
Yeah, most certainly. And hopefully this doesn't worsen just from a global trade perspective. But yeah, I mean, well behaved thus far. Let's wait and watch if that holds out too. But Samina is damn right on that. So remember, Asia's okay. GIFT Nifty or the SGX Nifty, I would really be surprised if there is a dramatic movement on either direction for any of these. Yeah, 26 points implied open. Let's wait and watch how that shapes up. But so what's the trade setup for the day? You know, just looking at what's happened to trade in the last 3 or 4 trading sessions, that line of the zone of 21,600 to 21,650 or 700 has been holding fort, and that's great news also, because from a put OI perspective, 21,700 has a large, or the maximum put OI addition that has happened, and therefore it kind of becomes a line in the sand. If we defend that, then that's maybe good news, right? We don't have too much to worry about, except for the fact that when I look at quant indicators, and there are 2 or 3 that are available to look at, they're pointing towards we being in the extreme greed zone now. Therefore, would that mean that you want to be careful with the leverage positions? And if you're making money into some of the trades, since it's very difficult to time the top, might as well take some money off the table in select pockets. Remember, yesterday, I think Avendus Spark, if I'm not wrong, in their note, Dr. C.K. Narayan in the studio, and various other people have spoken about, Chandan Tapari on the Twitter Spaces or the X Spaces yesterday, spoke about how January, from a time cycle study, points towards a possibility of some bit of a dip coming in. Samina yesterday highlighted how 8 of the 11 times in the last 8 of 11 times, January has been a month which hasn't given the greatest of returns. Don't try and catch the top. maybe take some chips off the table while you can, while the markets are still giving you the chance. Maybe it might not be a bad idea. But within all of that, the sector to focus on, almost everybody unequivocally talking about power as being the sector. And we're going to be talking about some bit of it in the editor's cut today, Samina, you and me. But just the kind of order flow that is coming in for most companies, and including Power Grid, which we'll talk about today, just spectacular as to what's happening with power. So that pocket remains center stage.
In fact, the stocks have been outstanding, to say the least, in 2023. But Niraj, I just want to come back to what we saw in trade yesterday, and you talked about the Nifty. Now, the question also is, we've talked about how banking has been underperformer for the last 11 and 12 months. We saw a very smart comeback on Bank Nifty in December, 8% rally on the Bank Nifty. Yesterday as well, it did attempt a dash towards 48,500, struggled around those levels, and finally went home with a 200-point correction. I do believe that if 48,000 is maintained, it will provide a little bit of an uptick. We're still about 400 odd points away from its previous record of 48,636. But your frontline names tried to do their bit, but all of them sold off. So this is where I'm a little confused, right? So if Bank Nifty does not provide the steady leadership the Nifty is looking for, will the other sectors pull their weight?
Good question.
IT,
right?
of course, is what you think is seeing buying as well.
The last few days, Samina, I mean, the gearings have been spectacular for IT. But yeah, it's $1 million question that you pose. If banks don't do it, what does? Because what if IT, once the commentary comes out, starts to sulk as well, which is what most analysts seem to believe. So
and I don't think the expectations are running very high. Yeah. So IT stocks as well running ahead of their earnings expectation. But there was sector rotation. We saw that yesterday. I think barring specialty chemicals, every other sector has been seeing buying across the board. So yesterday the day belonged to a couple of those fertilizer names. I mean, from your GSFC, FACT, RCF, those counters saw heavy buying, and they actually went home as well with pretty decent gains. Apart from that, Auto has seen some profit taking, but Auto ancillary. So some of those counters like JBM, Motherson, Sumi saw buying. So I think it's the smaller sectors that are coming in, which once again reiterates that there could be some froth. You want to take some profits off your table, like Niraj said. Very important at this point. It's always tough calling it a top. And I think for traders, it's doubly harder because you've got to make two decisions, right? Decision to enter and decision to exit, which usually is a tougher call to take, which is far further away from what investors usually do, right? When you're investing, you're really taking an entry call, you're not really taking an exit call, and that's what one needs to keep in mind. But let's also highlight stocks that you want to watch out for. GIFT Nifty is indicating to a flat to slightly higher start. We will take some heart from that. A few stocks, in fact, bunches of smaller sectors as well, not smaller, pardon me. Auto is going to be one you want to watch out for on back of its monthly numbers that will come through. But we'll highlight stocks for you in what we are watching out for. But before I go into that, Niraj, you want to comment on FI flows by any chance?
No, I mean, yesterday was a small number, rather insignificant, really.
But I must tell you, I mean, Agam mentioned this to me outside, and he said from what we saw in the last 45 minutes, while volumes were what they were, he does believe there was an institutional sell that potentially took place. So it was not your HNIs and it was not retail investors. It could have been one take profit order that came in from an institutional desk, but we'll find out as we go through the day. In the meantime, like I said, stocks to watch out for. We've got a bunch of those that we are tracking this morning. I'm going to quickly start running through them. Apollo, so watch out for that one. They reported earnings. The third quarter sales volume have come in at 6 lakh tons, which is down 11% quarter on quarter. So this stock number is not as good as the street expected. Apart from that, you've also got their Raipur plant ramp up, the management has said, is on expected lines. The Dubai plant has also started production in December 23. You've been tracking this one?
Yeah, and Samina, the December sales volume in particular was down 10.5% quarter on quarter, right? So for the month of December also, not that great numbers. And for a stock which trades at 55 times trailing 12 months PE, I think they better deliver every single month and every single quarter, which they haven't.
The only
disappointment for sure. The only thing is in their press release, and I read this, and I think we can put that out. They have said that the overall sales volume, their commentary is that the overall sales volume shall improve in the subsequent quarters as the signs for restocking are already visible post the recent reduction in domestic steel prices. Now that's a respite, but for a very expensive stock trading at 55 times, this is a disappointing month and a disappointing quarter for sure.
And the stock will be one that we will see a gap down on. It wouldn't be ruled out. You would see the stock. But also, I mean, Niraj, in defense of the counter, the last 3 months have also not seen much of contribution coming on AP or Apollo. So while it looks very expensive, I think the markets are realizing that and factoring that in. The counter is down 6% over a 3-month period at a time when the rest of the market has been very robust. Apart from that, Gensol Engineering, now this one's been in the news for the last couple of weeks. The board has approved fundraising plans of 300 odd crores via QIP. So the season of QIPs and IPOs continues into 2024 as well. They expect the authorized share capital will also increase by about 40 to 50 odd crores. So that's really what they're going to be doing with that QIP raising. They're expecting 4,000 crores by FY26 versus 393 crores in FY23. So again, those are very, very ambitious numbers going up. Expecting a 10x there by FY26 in terms of outlook and what they're saying. They said they need about 200 to 300 odd crores given the existing order book size, and they will also improve their debt equity ratio to 1:1. So that is where the fundraising money will be going towards. Markets probably will be excited about this one too. Auto stocks, like I mentioned, you've got TVS Motors, Eicher and Tata Motors. Those numbers is something you want to watch out for in terms of street reaction. We will talk to Bajaj Auto later on in the show at about 9:30 to understand whether or not the decline in auto sales, I mean, it's lower than what the street was expecting, is in line with the management's internal expectations, and most importantly, Niraj.
Yeah, and Eicher in particular, I mean, the stocks probably showed some signs of this chink yesterday because Eicher Motors was down in trade, as viewers would remember. Let's wait and watch if there is a bit of a problem for that stock today as well. One of the key stocks today could well be Power Grid. It's been declared the successful bidder to build 20 gigawatts transmission lines. Now, this is big. This is big, one, from a Power Grid perspective. Two, it's also big from a perspective of ancillaries, which essentially go into something like this. So I think cable companies, and particularly ones which make these long distance high voltage cables, could well be in focus today as well. So that is one piece of news. I think power financing could well be in news as well. We'll talk about that on Editor's Cut in a moment. But watch out, we've been talking about how power remains a sector to focus on. And the company Power Grid is also going to build two 765 kV DC lines crossing Rajasthan and Delhi. So watch out for Power Grid in the session today. Ultratech could well be in focus as well. Q3 total sales volume was at 26 MT, which was up about 2% quarter on quarter and 6% YOY. No great shakes, just that the export and overseas grey cement witnessed some very strong growth, but that is of course on a low base. Now, while I'm not too impressed with these numbers because the belief was that cement dispatches would look very strong, I think brokerages are sanguine. Systematics, for example, mentions that they have modeled a sales volume of 118 MTPA for FY24, which reflects a growth of 10%, etc., etc., etc. Mainly, they're saying that they believe a volume CAGR of 129.5 and 141.5 million metric tons in FY25 and 26. Estimates are unchanged, but they roll over the valuation to FY26 and arrive at a new valuation of 11,937 for Ultratech. Now, we're not yet done with FY24, and brokerages are rolling over valuations to FY26 as well. So, yeah, in 3 months' time, it'll become 1 year forward. For now, it is nearly 2 year forward, so be mindful of that. So that's Ultratech. And then JTL Industries. Last two things, JTL Industries recorded the highest ever quarterly sales volume, up 76% YOY. So JTL could well be in focus as well. So that's the other thing to keep in mind. Maybe that stock reacts positively, who knows. And some stocks which moved up on delivery-based buying. Yesterday, Samina and we were talking about each of these stocks on the closing show. But look at the delivery-based buying that we saw in a JBM Auto, in a Walkhard, and a clutch of other names out there, PTC, DCB Bank. Some very strong buying and very strong volumes marked for delivery. And this could make these stocks interesting to monitor in the session today. So with the technical experts, we will definitely talk about them.
I want to quickly add, Niraj, to two more stocks. Of course, not significant, but there's a lot of GST notices going on to most companies right now. I just want to mention with Sheela Foam now, their joint commissioner, in fact, has dropped the majority of demands of GST and has only asked the parent company of Sleepwell Mattresses to pay about 3,251. That's the number coming in. So I'll, of course, recheck that one. But this stock will be one you want to watch out for, is Sheela Foam, because while, like I said, you've got a number of companies who've got GST notices from the likes of an LIC as well. We'll have more details on that and whether or not the reactor stocks will be pertaining to ask. But talking about that, Niraj, also the GST number that came in, I think that's pretty much ahead of what the street was expecting. Could be some relief in that sense.
Yeah, well, if people are worrying why is the disinvestment not happening, hopefully GST revenues kind of soak up some of that as well. So that could be interesting. And just before we go to editor's cut, Samina, there's one brokerage note that I want to mention. I don't know if we have graphics for the same or no, but Nomura's note on Lupin. So there is a Jefferies note on IT. They are saying that they're underweight IT. They have put out this whole Outlook 2024, which I'm sure we'll cover on the show. But Nomura's note on Lupin is interesting. They have a buy call. They have upped the target price quite significantly on Lupin as well. And this follows a slew of brokerage notes doing that on Lupin. And this follows what has been a banner year for Lupin. If you look at the last 12-month performance or one-year performance for Lupin, I think it's northwards of 75%. So it's been a very strong showing for the stock. And there is more upgrades that have come in on the target price. So watch out for Lupin as well. But that brings us to the end of trade setup, at least for the day. But me and Samina are going nowhere because we are joining Alex on the editor's cut today. Alex, why don't you tell us, or why don't you tell our viewers, what do we have in store today?
In fact, both of you are going to be telling our viewers most of it. I'm just setting it up for you. But essentially, we are talking about something that Niraj was talking about during the trade setup, which is the power space. And specifically, we're going to be focusing on the power finance companies, or the infrastructure finance companies. You've seen these stocks, the likes of Power, REC, PFC, as well as the newly listed REDA, run up very substantially. The question is the good news in the price? And perhaps Niraj will have a bit of an answer for you there. And there's also a conversation around the latest update from CMIE. They're talking about the capex cycle, and they're talking about a significant update there. Of course, leading from the third quarter, the numbers look good, but the question still remains on the execution of the projects that have been announced. We've got Samina, who's got some very critical numbers to talk about there.
Should we start with her? Because that's the big macro thing.
Yeah, that is the big macro.
In the deep end. Okay, so very quickly, yes, like you said, the CMI data is a little bit of a mixed bag. So it's in revival mode, and that's what they're calling it. So some green shoots as we go into a brand new year. Investment mood, and I'm going to quote unquote, has improved in the December quarter. 2.1 lakh crores of new projects have been announced. Now, this is 15% higher than what we saw in the last quarter. So we're all getting excited about that number. Capital expenditure, though, on the other hand, is actually much lower. So it's coming at 9.5 lakh crores, which is YOY. More importantly, that number does not look as good as, of course, the uptick in investment cycle. But I think what the street would want to take heart from is the private companies have led the way this time. So you had JSW Neo Energy has pumped about 15,000 odd crores in their project in Almora. You've also had Welspun New Energy that is pumping about 13.8 odd crores in Odisha. So both of those majors have led the way in terms of private investments. New investments are clearly coming in from the private sector on expectation of consistency, on terms of continuity rather, in terms of policy. So after what we saw in state election outcome, I think India Inc. is a little more confident in terms of, making those announcements, making those investments. But the flip of that is public sector investments are still not going to pick up, right? Because there is fiscal consolidation. That's the focus. I don't think the center will want to focus on that. On back of that, public sector appetite is expected to shrink, and that's the general reading in terms of what those numbers really mean. Manufacturing continues to lead the way. So 65% of the new projects have come in from the manufacturing sector, which is up nearly 95% quarter on quarter. Construction, real estate, and we've been talking about that. Niraj has been talking about how construction real estate is suddenly seeing a pickup. That space has seen a 59% jump Q on Q, but it's up 5x year on year. So it's seen a massive jump from exactly a year ago. Electricity services continue to fall. Inorganic chemicals, so specialty chemicals, is seeing a pretty smart pickup in inorganic spending, right? So 1/3 of manufacturing is actually come from a space that, again, we've been talking about, and how we do anticipate the next 2 quarters to be the end of the rough run for the specialty chemical space. Remember, these were the darlings of the street, right? So no surprises that the money is...
The question is who's going to stick their neck out and say that the bottom has been hit?
I think, you know,
So
guys like
people are
Hiren
doing that,
have actually
yeah.
said that. They're pretty, I mean, they've had it rough. Yeah, they were, you know, the darlings of the street, and they've gone from pride to glory to, yeah. Well, apart from that, domestic consumption will remain soft. Global demand could be a concern, so that's what you want to keep in mind. But I think what, again, we've talked about in various ways is execution. Right, that continues to still remain a challenge. So while projects have seen an uptake, only 1.2 lakh crore orders have been completed versus a 1.7 lakh crore, which is a rather average in that space. So completion has declined 15% quarter on quarter. This comes in after a 7% decline that we'd already seen in the previous quarter. So while investment outlook, capital expenditure, all of those look great, execution continues to remain a challenge.
And in fact, I think that is a theme for quite a few of the projects that have been announced in the infrastructure space as well, Niraj, where the big ticket items have come in, but then a lot of people are saying, hey, you know what, order books look great. When are you going to convert that? And I think to a certain extent, it's interesting, the dichotomy, right? So private players are now stepping up and saying, we're going to spend money. And the government spending just before the elections, of course, is going to ease off a little bit.
I think
that is the point, right?
Yeah, and Samina was making that point as well. That, you know, at least off air, that too, that, you know, the expectation was that government capex at some point of time in quarter 3, quarter 4 might come off. Does private come and stand up? And, you know, hitherto we had seen private capex, green hydrogen, data storage, etc., and data centers, etc. Now, as Samina is saying, it's interesting to see that chemicals is making that large capex presence felt. And that's great news, right? Because we need this to come for India manufacturing and the capex story to stay alive and kicking. And
for the manufacturing space to really kick on into the next leg of growth, you need infrastructure, right? And from that perspective, it's an interesting segue to say that the roadmap for growth for a lot of these infrastructure companies, and indeed the financiers of those infrastructure companies, is quite strong. But the question is, and you were talking about this in your trade setup, Niraj, is that brokerages have gone forward into FY26. Are we also discounting earnings that far for some of these companies?
If you can't justify it in the near term, you just extend the
push the goalpost a little bit.
Roll over. Yeah, I mean, so, yeah, you know, maybe too early for FY26, but, you know, Manish Sonthalia on the opening day or the opening week mentioned that, you know, that's par for the course, and he's buy side, not the sell side. So, you know, maybe you take it. But yeah, the point is, so we a bunch of infrastructure finance companies, but we are focusing mainly on power for this piece at least, and the power financiers, which is PFC, REC, IREDA, right? Now, the big picture, the power sector is expected to add nearly 212 gigawatts of total capacity during FY22 to 27. This is as per a Care Edge note that I've borrowed it from. So the existing capacity, just for reference, is 426 as of November 2023. Wow. So therefore, they nearly add 50% over the next 5 years of the existing capacity over all these years. Right. You know, that's the substance of the kind of addition that we're talking about. And obviously, this happens, I mean, as any infrastructure project. Debt financing is a large part, 70%, 80%, what have you. So debt financing is pegged at around 11 lakh crores for this period. Now, you can divvy up as to when does execution happen and how does the financing happen in which year. Now, that is, you know, searching for decimals, but the larger picture is this. Now, is there advantage PFC, REC, IREDA? And there are numbers out here to take account of. So the disbursements by the IFCs, by IFCs I mean infrastructure finance companies, the disbursements by IFCs will be higher in FY24. Obviously goes without saying. The various estimates range between 35 to 45% growth in disbursements in FY24 YOY. Now keep this in mind that the loan portfolio for IFCs, Alex and Samina, has grown at a CAGR of 9%, just 9% in the preceding 3 years. and banks have stayed flat.
Right.
So one, that these companies have grown their loan portfolio, but it's only grown at 9%, and that has shown this traction in earnings. What happens when this loan portfolios expand even more and earnings expand even more? ROAs expand even more. I think that's the key thing. So that is part one. The positive triggers, we know that the sectoral tailwinds would prop up the overall loans. For example, LRR Securities says for REC, the overall loans will grow by 1.5 times by FY26. Not 5, 10, 15%, 1.5 times FY26. So that is part one. 16% CAGR growth, loan growth forecast from FY23 to 26 by various analysts, and gross NPAs have declined. 2019, the peak gross NPAs were about 11% or thereabouts. They've come down, or 7% in FY19. They've come down from 7% by nearly 400 basis points.
Right.
So naturally, profitability also goes up as a result of that. And that's happening on account of various reforms that have been taken, right? We know about them. So that is one. The only question is, as is the question being asked for almost all sectors, is all of this is whether it's in the price or no, right? So REC is up 155% in the last 6 months. PFC up 124% in the last 6 months. So there's a substantial gain that has already happened. The price to adjusted book, I think this for REC, is over 1.5x FY25, not even FY24. And this is at the higher end of the valuation range. By any stretch of imagination, these stocks haven't traded at these valuations in the last decade. Now, you could argue that the decade is different from the last decade, but still at some point of time, you will think that, are we paying too much for this? And there are risks, right? Because there is a sectoral concentration. Never mind how strong the sector is. There is a client and a sector concentration out there for these companies because they're lending predominantly to one sector, not various forms of infra. Now, they're adding other forms of infra, but it's not a very large portion. So the only question, and there are no questions about growth for these businesses. The only question is the valuation.
So, okay. The other question is, we're assuming that a large chunk, and we're talking about 2 lakh crore per annum of incremental debt that is going to be required to be financed. The question is, do these entities take the bulk of it, which has been the case in the recent past because banks have been wary of getting into the infrastructure space and particularly power because they burnt their fingers in the past. And from that perspective, can the loan book grow that fast? Do they have the capacity and the appetite to grow that much?
Yeah, so banks, the share of power sector loans and infra loans has stayed stagnant, but the overall loan book has grown for banks as well. So in some sense, banks' loan portfolio has also gone up. Just that because the sector is doing so well, on hindsight, people will say that banks did not take advantage of the reformed power sector and the kind of loan book that they could have, which is what PFC, REC and IREDA have done. So now that's a question that banks will say, let's talk about it 2 years down the line when the NPAs start cropping up, if they do. Who knows?
Okay, all right. So maybe to a certain extent, unanswered question on the one, whether or not we're paying too much. Maybe we can ask a few of our experts over the course of the day to give their view. People have said that PSUs are just a tad bit hot at this juncture. Let's get their view on PFC, REC as well. But that's all we have on this edition of the Editor's Cut. There's lots more lined up before the start of trade, and do stay tuned for that. This is NDTV Profit.
right, back with India Market Open right here on NDTV Profit. Let's take a look at the GIFT Nifty very quickly and look at the implied open and see how are we likely to start off trade before I hand it over to Agam, my colleague, for the derivative space. But the implied open will come up on your screen in a moment. Can we, or are we having Tuesday morning blues? No, we aren't. Or are we? Okay, let's wait. But I know that the implied open is indicating a start which could be marginally higher, 20, 25 odd points. Okay, 20 odd points. Cool. You're slightly late, but not too much. But you know what? Agam is never late because he spots some of these derivative trends before they are due to happen, and we give you some very good option strategies for you to trade. Too much of patting on the back, Agam, but take it away. Good morning. What is the stance looking like today?
Right, so spotting a trend based on yesterday's half an hour of trade is going to be very hard, very challenging, Niraj. But I'm still going to attempt as to what's really happened in the last half an hour of trade. That said, let's start by taking a look at the indices. Now, we did see new life highs for the major indices, including the Nifty, which at the end of the day closed well with marginal gains. It was flat, actually, and we didn't see too much change in open interest. And coming down the Bank Nifty as well, we saw a little bit of unwinding coming through as far as open interest is concerned, decline of around 1.2%, and marginal losses there as well. What's really happened in the last half an hour of trade is that after we saw these benchmarks hit a life high, we saw a sudden drop. Now, we must remember that this is coming on the back of, very low liquidity because we don't have too much activity when it comes to not only options, but also your cash stocks. Now, what could have happened, and we are posing some questions at the moment. Yesterday was the BankX expiry. That is the BSE BankX expiry. And that's the weekly options expiry. We know that is not very liquid. And we also know that there wasn't too much liquidity with respect to banking stocks. So if you consider something like a State Bank of India, an HDFC Bank, and an ICICI Bank, all of these counters did see very little volumes. The question really is that did someone, in fact, try to take advantage of that low liquidity? If you, in fact, do see the volumes in the last 20 odd minutes, especially when it comes to some of these larger names, you realize that the volumes have certainly picked up on a relative basis with respect to what's happened earlier on in the session. Specifically, something like an SBI or something like an HDFC Bank. Remember that HDFC Bank, State Bank of India, along with ICICI Bank, have a weightage of as much as 70% on the BankX, which means that if you are just able to move the needle just a tad bit, it could impact considerably the option premiums on the BankX as well. So this is the question that we are putting out, whether or not someone did in fact take advantage of this low liquidity. We're not suggesting any illegal operations at the moment, absolutely not. It's very much in the confines of legal trade, but the question at the end of the day remains as to what really went down in the last half an hour. And because of that traction, did we see a little bit of an impact coming through for the rest of the markets as well? That said, that's as far as the BankX is concerned. And of course, today we will start seeing a little more activity coming through because we have the Fin Nifty expiry. And once again, the same banking constituents also come into focus because they also have a considerable weightage on the Fin Nifty too. Now, we'll talk about stocks as well and take a look at where we have, in fact, seen a lot more traction. So when it comes to the broader markets, the advanced decline ratio was very strong despite that half-an-hour volatility coming through. And we did see advances for Delta Corp, Gujarat Caps, Zydus Life, along with Balrampur Chini. And Eicher Motors saw a little bit of weakness with fresh shorts building in. And as far as those stocks which saw unwinding in open interest, and remember that this is early days, so we won't see too much unwinding coming through. Well, we had Tech Mahindra, MRF, Bank of Baroda, and Balkrishna in focus in terms of short covering. Now, that's as far as your stocks are concerned. What are our analysts making of these trends, and what do we do when it comes to our own markets? Let's get in Shilpa Rout. She is from Prabhudas, Lilladher, and she looks at derivatives and technicals out there. Shilpa, good morning, and thanks so much for joining in. I'm going to take your assessment on what possibly could have happened yesterday in the final hour of trade, as well as how you're looking at trade in the benchmarks in general going forward.
Good morning, everyone, and wish you all a very happy new year. Talking about indices, what happened yesterday, it was also an expected lines that we generally see the first day of the trading year, the first session. We were expecting some sort of low volume in the market, and that played out quite well. But of course, the intraday highs of lifetime highs, Nifty making, and then again, we saw the dip happening also instantly, indicates that, people were actually waiting for that highs to happen and then book some profits, which played, and I would give it a benefit of doubt for 1 day session and not, inferring that, we have some sort of texture change in the market. If you look at the option chains as well, you will understand that 21,700 on Nifty is posing as a very strong support zone, as well as we see that there are very aggressive put writers, standing tall out there. The individual strike PCR at 21,700 is also well above 2, which indicates that we have a sort of cushion out there where, market can see that bounce happening. So in order to play for the day, I believe that 21,800 straddle, where you buy the call and the put both, and that sums up to a amount of around 200 rupees. You keep a stop loss of 150, and any one side of sharp movement that can happen today or, a couple of days, which we're expecting, you will make money. So that is one strategy to play out for Nifty. Talking about Bank Nifty also we see very aggressive, call writers and put writers, all over scattered throughout the option chain with 51,500 on weekly expiry showing a lot of traction with 47,000 on the downside. If you look at a very narrow range also, we see that 48,000 put writers are very active. So which means that this decline towards 48,000 will hold up, and you might see a bounce back towards 48,700 as well.
Okay, Shilpa, so let's talk about stocks then. And right at the top, you have Zydus Life. We've seen some strength yesterday as well. Can you take us through your call here?
Yeah, I have a buy on Zydus Life. We saw very aggressive OI additions to the tune of 14% yesterday. And this stock now just, trade above 700 and sustenance above that will see a very sharp up move towards 725 to 730. So buying 720 call option here at around 21 to 24 rupees in between this range with a stop loss of 17, you can see targets of 33 to 39 coming in. The other one would be a sell call, but playing through options is safe. So Eicher Motors is something, and I'm looking at where we see a lot of weakness happening. So 4,000 put for Eicher Motors, is a very good buy right now. It is trading at around 100 and 105 odd points right now. So with a stop loss of 80 from here, look at for targets of 147 to 160.
I have two questions. Firstly, is that the likes of something like a Zydus, the options, universe is not very liquid, which means that there is a potential chance for you to maybe get stuck in a certain position, or you may not necessarily have the required premium that you want to make an exit on. Maybe Eicher Motors is a little more liquid, but not very liquid. My question really is that why are you buying options on a naked basis and not perhaps initiating debit spreads or credit spreads for that matter in this case?
In this case, what happens, when you generally cater to a large mass of the investors here, participants, we don't have people, where they understand how to adjust a strike price when you go for debit spreads or, any sort of option strategies. Any ups and downs, if they don't understand how to adjust, it becomes difficult for them to manage. So I believe, catering also to those retail investors who are, small pocket size, and they understand and they can adhere and listen to the stop loss levels and follow that, there are chances more that they would survive this market and be ready to take on their trades as and when it happens.
Sure. And of course, the other question here is, Shilpa, that for all the sophisticated viewers out there, if you were to go ahead and suggest a spread, what would it be on both of them?
For me, buying 720 call option and, selling 750 call option, spreading out on a bull call spread from here, that will also suffice. You will get inflow, very restricted inflow, and, the loss is also limited to a particular amount. So that would be one strategy, if you want to practice for Zydus Life. Buy 720 call option and sell 750 call option.
Plus, we must remember that if you do, in fact, deploy a debit spread in this case, because you're going ahead and buying an out-of-the-money call and then selling even a further out-of-the-money call, well, your risk-to-reward ratio becomes very, very agreeable. We will need to have the details on that one, but I reckon at this point in time, it could be anywhere between 1 rupee of risk to about 3 to 4 rupees of reward, which is always, preferable. And, of course, it gives you a little bit of an advantage when it comes to convexity as well. And that perhaps is a difference as far as this specific strategy is concerned as compared to perhaps going ahead and buying a future. Remember that future, while it does have unlimited gains, it also has unlimited profits. Shilpa, is my assessment correct in this case?
Absolutely. I was just looking at the option prices, 720, trading at around 21, 22 rupees and 750 trading at around 8 rupees. So the risk is around 14 rupees from here. And you have an upside of, more than 17 to 18 rupees. So the risk reward is very well played out. And the point of, practicing for the strategies for only people who understand, how to manage the strikes if in case the situation goes hayway. You are very restricted to the amount of maximum loss you would make. It also happens when you buy naked call options, but if you maintain the stop loss, that is well good enough for you. But in this case, what happens, you also buy a little more time for yourself. Because option trading, your enemy is your time. So if you're practicing bull call spreads, what happens, you are giving yourself a little more edge on the theta, that even if your view is not going correct in, on a couple of days, you have that window open to even make profits, wherein the selling of options which you make at the other strike, and when the time theta decays, the premium erosion is the gains that you make. So there are various ways to see option trades, and it is like we recommend everyone, it is completely up to an individual to understand how they want to practice.
Right. Well, Shilpa, thank you so much for joining us and taking us through the many ideas that you have based on this couple of threads. Thanks so much for joining in, and with that, it's back to you, Samina.
Thanks for that, Agam. Those are two FNO strategies coming in on Zydus and Eicher Motors. And we'll keep it with the auto pack because that is going to be the talking point for most of today in terms of December auto sales. Maruti as well, remember, reported auto sales for December, which were about 1.3% lower in the month. We caught up with Shashank Srivastava on his outlook for the auto sector and factors that might have impacted the industry, or will impact the industry rather, going into 2024. Let's listen in.
Generally speaking, the auto industry growth is very closely related to the GDP growth, the per capita GDP growth. And there the projection so far is about 6.5% or thereabouts. And that's very positive because there is a very high correlation between the auto industry growth. In fact, correlation, statistically speaking, the R square factor is about 0.983, which is a pretty high correlation. So anything which negatively affects the overall economic growth would affect the auto industry growth as well. Of course, auto loan rates, if they were to go up, will also adversely affect because 80% of the retails in the industry happens through the auto loans. And therefore, any interest rate hikes there would be negative for the industry. Also, the fuel prices can go either way. Because of the geopolitical situation, it's possible that you could see spikes upward for the fuel prices, or if everything happens okay, you could even see a lower demand if overall demand for energy comes down, depending on the economic growth in other countries. So there are many factors which can affect. The commodity prices is the other big thing. It's a big cost. Material cost is about 75%, 77% of the overall cost of any auto OEM. And any changes in the commodity prices which will reflect in material cost changes would obviously also affect the industry. So there are many factors, and I think we continue to make estimates of which way and take positions on which way the things will move. And right now it does appear that things are positive and we can expect positive growth. Only thing is that this high level of volumes which we have already achieved, you would expect the growth to be muted and, in my opinion, a single digit.
Well, autos it is. And let's start off the conversation this morning with Saurabh Jain. He's equity head of research at SMC Global Securities. Joins us on the show. Saurabh, good having you. Thanks so much for taking the time out. Niraj here. Good morning. Can I start off with that, Saurabh? By the way, actually, just very quickly, did the last 30-45 minutes of a small downtick yesterday become a big talking point in your equity house as well? Was it par for the course?
Good morning, Niraj. Happy New Year. See, I don't think so one has to look at that way, because there is everybody does knows that there is a low volume happening in the markets. A lot of markets were closed yesterday. There was lower participation, and a bit of selling results into good fall. So I don't think it really matters.
Okay, fair point. So hence, let's move to autos, because that's what we were talking about. I'd love to understand from you, what did you make of the news flow around auto sales numbers or cement dispatch numbers as they've come out over the last 24 odd hours, Saurabh?
If you look at the auto numbers, what we are seeing is that there is a demand for the premium vehicles, be it four-wheelers, be it bikes or anything. Anything above 125cc is getting good traction. SUVs are getting good traction. In the last 5-10 years, you must have seen that the share of the SUV has risen a lot. So that is what we are witnessing. Albeit the volumes are lower than the expectation, but companies like Maruti, Mahindra are making good roads in the premium segment, and even are expected to come out with the newer variants, which will actually help them to gain further market share and enhance volume in 2024.
So have with us Shrikant Chouhan, who will be joining us in a few more minutes. But I want to continue talking to you about what happened in the markets yesterday. We saw very small sectors. Actually, I should stop calling it small sectors, but sectors where we've seen sector rotation take place. So one such space that saw an aggressive sort of buying through the day was the fertilizer pack. From a fact and RCF to GCFC, all those counters have gone home with gains of 4 to 10% each. In the fertilizer pack, is there something you've heard or that could sort of indicate that these are stocks you might want to pick up, or investors or traders could sort of buy?
See, the fertilizer sector has been running because of the expectation that the government would continue to boost the agrarian economy, and the clear beneficiary will be fertilizer. Among the fertilizer, we like a company like GSFC, which gained yesterday in the trade in the last day, approximately 13%. If you look at the numbers are good. Even the management is quite confident. They have some different side of apart from the fertilizer, they have some chemical business which is growing at a good pace. Apart from this, the company is also making inroads in the hydrogen space also. So this is the company we continue to like.
Okay. Let's welcome in Mahantesh Sabarad as well. Independent expert joins us right now with his thoughts too. Mahantesh, thanks for joining in and a happy new year. We are just talking to Saurabh about autos. I know you look at that space very, very closely. I'd love to start off by understanding what you thought of the numbers as they came out. More importantly, it's a sector that has given some fairly strong returns the last 2 or 3 years. Is there more in store here?
Good morning and Happy New Year to all your viewers, including you.
Thank you.
As far as automobile sales are concerned, I think this is a sector which still grows steadily. And you did mention about the sector giving returns for the past few years has been quite good, simply because it has outgrown the low of the COVID period. Now we have a situation for automobiles which has got favorable tailwinds. You have got interest rates now set to either fall or stay steady. That's one important tailwind for the auto sector. Overall, transition to EV side has been slow. So that's a bit of a headwind, I would say, for the automobile company. But the favorable tailwind within the EV sector is that most of the companies, after the initial reluctance, are upping their plans in terms of introducing more and more electric vehicles. We have seen one trend, which is that most of the passenger vehicle manufacturers have done away with the diesel model per se, and that's a big pointer to the fact that they will soon move or refresh their portfolio ahead. from a buyer's perspective, the important tailwind that you're going to get is now the choices are a little better. You have a new player like Citro coming in, just as an example, and you have a substantially good portfolio coming from the likes of the traditional manufacturers of Mahindra or a Tata Motors, who hitherto used to typically have just 2-3 models within their basket of passenger vehicles. Now they have more choices available for customers. So that's a favorable tailwind that is kind of coming in. And finally, SUVs are growing. I think that's an important trend that has been holding on for several years now.
Mahantesh, you, of course, like Niraj said, have been very passionate about the auto sector and have tracked it for so many years. Let's break this down, right? We did catch up or hear about what a few managements have indicated, and they've all said that this month is soft, but it's met internal expectations. Of course, we're also coming out of a season which was the festival season, which saw robust growth across the board. So there's a little bit of high base that's playing out. If I had to ask you in terms of making your picks for the auto pack, because we've also seen some profit taking yesterday, which auto stocks would you initiate in your portfolio at this stage on back of the numbers that we're seeing and will see in the next couple of quarters?
If that's the question, hypothetical question that we look forward to in terms of which automobile company is likely to do better, and with the backdrop of the stock performance that they have delivered for the past year or two, then I would definitely pick Maruti among all the automobile packs, simply because there is a lot more to grow ahead for Maruti relative to the others. Either a Tata Motor has caught up in terms of valuations, the valuation expectations have become too high, or you have a situation where the growth will not be so strong as before because of the base effect. That's the case of a Mahindra. So Maruti is something that therefore has a combination of both, a good growth factor to look forward to, and valuation catch-up is required as far as Maruti is concerned. Now, when it comes to two-wheelers, there have been steady performance. In fact, a lot of underperformance of the two-wheeler companies, both in terms of sales delivery as well as in terms of actually stock market performance, is now a thing of the past, and they have better outlook ahead. So, like I said, so if this being the hypothetical question on what's likely to be a good year ahead, it would be relatively better for a Maruti.
Chouhan as well joins in with a technical view on the markets. Shrikant, I will talk to you about the Nifty and Bank Nifty in a minute, but because we are part of this auto conversation, you want to jump in with your trades on the auto pack, Bajaj Auto, Maruti, Eicher, TVS. All these stocks saw some profit taking in trade yesterday. How would you trade the auto pack this morning?
Yeah, good morning, everyone. I think the way there is activity in almost all the auto companies, Bajaj Auto is really doing well. It is forming higher top, higher bottoms, and whenever there is any distribution sort of formation, it crosses to that. So I feel if there is any correction, then certainly we should look for adding Bajaj Auto to the positional portfolio, because there we are expecting stock to move towards 7,000, 7,500. No doubt that there is a valuation gap because the fair value and the current price is far away. But based on the trend following method, I think we should look for adding position if there is any correction in the stock close to 6,000 levels. But yes, we like Tata Motors as well as Mahindra and Mahindra. The reason is because the stock Tata Motors has crossed its all-time highest level after a very long time. It has spent a lot of time below the levels of 500, and after crossing these levels, the next level to watch out for would be close to 1,000. So based on technicals, I think the stock is heading towards that 1,000 levels, and currently it is around 800, 820, but 750 is going to act as major support for it. So if there is any correction, because after most of the time monthly numbers, we see some correction in auto companies. So in case if there is any correction, then close to 750, we should look for adding Tata Motors, as well as we like Mahindra and Mahindra, which is around some 1,700 levels. There also we feel that it is finally heading for the levels of 2,000. But in the correction, close to 1,650, the stock is having excellent support. So buy on dips should be the strategy for buying stocks like Bajaj Auto, Tata Motors, as well as Mahindra and Mahindra.
M&M, Bajaj Auto and Tata Motors. Buy on dips, that's the strategy coming in on a technical angle. And of course, fundamentally, stocks like Maruti is what you want to keep on your radar. We'll slip into a break. We're expected to open on a flat to slightly positive note. We'll take a break, but there's a lot more on the other side. So stay with us as we gear up for pre-open trade.
Back with India Market Open, 3 minutes left for the session to start, and our guests are with us. Shrikant, can I request you to give us your stock recommendations for the day? You've spoken about autos, but beyond autos, what are the stocks that you're recommending this morning?
Yeah, good morning, Niraj. I think technology stocks have again regained from their immediate lows. Most of the auto companies, most of the IT companies recovered and they close above their important pivot levels. So the important levels which they have crossed are clearly indicating us that we are going to see further more activity in the near term. Specifically Wipro, which is around some 475, 480. There we are seeing further more activity in the near term. At least 500, 495 should be the level where the stock should come in the near term. We can keep stop loss at 470 for the same. And we also like few metals and mining companies. In that specifically, GMDC is really doing well. NMDC is already into breakout. It is very close to its important resistance level of 220. But GMDC has now again started its up move after consolidating within the range of 400, 420. So the next level to watch out for would be 450, 465. So at current levels, GMDC is also a buy with a stop loss at 425. So GMDC as well as Wipro should be on the watch list in today's day.
Right, GMDC and Wipro should be on the buy list. Mahantesh, I'll come to you very quickly on auto ancillary. We've still got a minute to go as we gear up for pre-open. What is happening in the auto ancillary pack? That space did see some buying in yesterday's trade. Is that the EV excitement? What is really the theme that's playing out for auto ancillary?
It's not just the EV excitement. I think the auto ancillaries have traditionally geared up to what the OEs wanted. Plus now you have a situation where the exports from auto ancillary companies are likely to grow ahead because Indian auto ancillary companies are becoming the preferred choices of many of the global brands, with China's influence slightly waning. That being the case, you would typically look for automo ancillaries that have not just an export presence, but also a global presence in terms of overall plants and manufacturing capabilities. Plus, there is this EV transition that you talked of. Now, while the EV transition happens, there are certain cluster of auto ancillaries who are at a disadvantage relative to the other set of auto ancillaries who stand to gain because of the introduction of the EV. So obviously you have the engine, the prime mover side of the auto ancillaries slightly suffering, but overall on the body side, trim side, interiors, or even from a transmission perspective, many of the auto ancillaries should typically be protected. particularly there is a change in terms of development activities or I'll not call it research per se, but development activities in terms of newer products that auto ancillaries are bringing in. And those kind of transformations for auto ancillaries are notably worthy. So, for example, batteries. Batteries is a side which will, for many of the auto ancillary battery suppliers, will be a transformative kind of development ahead. Similarly, you have such companies as on the axle side or transmission side who will have to readapt their components for the EV space. And of course the trims, which means that overall connectivity within the car is going to go up substantially, and there are newer and newer companies that are coming up with connectivity kind of solutions, which were not there earlier, a decade back or so. So there's an exciting development that's likely to happen there. And many of the traditional auto ancillaries are also wanting to get into that connectivity kind of space. So yes, the development seems to be a positive development ahead. Irrespective of that, we should not forget that the EV development is limited only to the passenger vehicle side as of now. The two-wheelers did pick up, but then the penetration is not growing substantially. I think the customer adoption of the electric bikes within India is a little tepid to what one would have expected it to be. That said, coming back to the EV presence only in passenger vehicles, the point that I'm trying to make is that commercial vehicles is a separate game altogether for auto ancillaries, and there is quite a bit of growth likely to happen given that the infrastructure push that is coming up from the government side would see that most of the commercial vehicles will become better, and auto ancillaries therefore will have a more value add possibility ahead.
Okay, so Mahantesh, sorry, quick 30 seconds. What are the ancillaries to watch out for then? Quick 30-second answer in the commercial ancillary space.
I think the commercial and ancillary space, you have to look for those which are into the transmission side because transmissions are becoming bigger in terms of size,
sure.
In terms of deliverability. I think the traditional auto ancillary companies in the metalworking on the transmission side would do typically better.
So what are these? Sorry, I'm not asking you to give recommendations, but what are these companies?
So Bharat Forge is a big player in the transmission side, right? So you will they make the traditional forged kind of components. So you will have these kind of companies who will do well. You'll require larger forgings, and not only that, you'll require forgings that will go into a connected space. Transmissions will have to be in the connected space within, even for a commercial vehicle. So you will have even a Motherson Sumi, for example, likely to be present there. So these traditional big auto ancillaries will have better days ahead for the commercial vehicles, where there will be a possibility of more value additions on the transmissions side.
Got it. Okay. Now, before I come to Saurabh, I would want to get in my colleague Anushi Hu Johnson with the key stocks to watch, at least some of them in the session today. Anushi, good morning.
Morning, Niraj. So I have 4 key stocks where some business updates came out. So I'll start off with Coal India first. So Coal India's production data came out for December, wherein they have reported about 8.2% year-on-year, close to 71.9 million tons, while its coal offtake was up about 6% to 66.6 million tons. Now, if you look at the 9-month FY23 figures, it showed about 11% year-on-year upside, the production, and the offtake was about 8-9% up. Now coming to JTL has recorded its highest ever quarterly sales volume at 1 lakh million tons, which is up 76% year-on-year. While looking at its 9-month FY24 figures, that is about 62% up. So this demand is mainly coming from the structural steel tubes and pipes, and they're seeing a healthy demand across both the global and domestic sectors. Apart from that, the company is also now strong focused on its capacity expansion with an investment of up to rupees 1,300 crore, with the promoter group investing 540 crore out of it. Then we have APL Apollo, which Q3 sales volume stood at about 6.03 lakh tons, just down about 11% on a quarter basis, but was flat on a year-on-year basis. So in this, the contribution from the value-added segment stood up about 59% year-on-year. Now, lastly, there is Ultratech Cement, which came out with its Q3 domestic sales volume at about 26.06 million tons, showcasing about 5% year-on-year growth and about 2% quarterly growth. If you look at the overall consolidated sales volume, considering the overseas grey cement volume as well, that is about 27.3 million tons, which showed again a 6% year-on-year upside and about a 2% QOQ upside. So with this, now the company's consolidated capacity stands at 138 million tons per annum. So these are the 4 key stocks to watch out for today.
Right, Anushi, it's going to be a busy morning. Lots of counters that will be in focus. And I'll take a cue from Anushi on numbers that we've highlighted. So APL Apollo numbers were a disappointment. They've declined again in the December month by about 11%. JTL, on the other hand, has had fantastic reporting for December. Saurabh, you track the space. How do you explain this very opposing sort of number reporting between APL and JTL? Same sector, but one looks so promising and the other one comes in as a huge disappointment, which is APL. And also Niraj mentioned this, where he said the valuations look so stretched for APL that they have to keep month on month delivering. That's a huge task. So rather absurd in that regard. How would you approach the sector, and would you buy either of the counters I just mentioned?
See, first of all, we don't have recommendation on any of the two. If you look at the valuations have skyrocketed like anything in the last 1 year. If you look at the last few months, the stock hasn't performed. I'm talking about the APL Apollo. If you look at the numbers are not coming in line with the valuations that company is trading in. It is trading close to 14 times to book value, and the numbers they have just announced, degrowth. This isn't the market is looking for. So I expect some kind of deceleration and cooling off in the valuations of the stock.
Shrikant, you want to come in on fertilizer stocks? Any of them that you'd buy this morning after a sharp rally we saw yesterday?
Yeah, I think most of these stocks are really doing well, and they are also coming out of their important resistance level. But in that specifically, RCF looks really good, which was underperforming, which was below the levels of 160 for a longer time. Now it is heading higher. So the next level to watch out for could be around 180, 190 for the same. And maybe in the best case scenario, we may even see the levels of 200. But National Fertilizer is also something which is really showing a lot of strength. It is forming some double bottom sort of formation, and after crossing the level of 90, now the next level to watch out for would be 140, 145, because the stock has spent a lot of time below the levels of 90 to 2022 on the downside, almost 10, 12 years. So crossing this level is something significant for the stock. And based on the overall formation and the way there is broader base activity in the entire sector, I think this stock should do well in the medium to long term. So in case if there is any correction, we should look for adding National Fertilizer to the positional portfolio. But with a trading perspective, I think we should look for focusing more and more on RCF as well as Chambal Fertilizer.
Right. Mahantesh, I want to pick up this stock with you, and I don't know if you track it. JBM Auto, very sharp rally in trade yesterday. There were a few news triggers that came through as well, but the stock was up 14% to hit a one-year high. I believe the exchanges are seeking clarification on the e-business delivery report, but do you track this one at all?
Not really. JBM is a very old auto ancillary company, grown on the back of a Maruti kind of ancillary. And I believe every auto component company or auto ancillary will be announcing some or other diversification into the electric vehicle kind of side. Look at, like I did mention about the batteries, I did mention about even bearing companies are looking at transforming into the EV space. Going ahead, because in the transmission side, your gearbox will get soon, replaced by what is called as a transfer case, and you'll have additional bearings coming on the hub side as well. So all these developments related to EV side diversification are likely to happen, and therefore wouldn't really track it as of now until the development is really concrete.
Okay. Now, some more individual stocks to focus on. Samina, we were talking about this arbitrage between Inox Wind Energy and Inox Wind. Now, just pull up the pre-open prices there. Yesterday, both Inox Wind and Inox Wind Energy were up 5%. Today, Inox Wind Energy is up 5%. Inox Wind is flat. But largely, just the kind of gains that some of these stocks have seen have been stupendous. Saurabh, do you have coverage on the wind turbine companies, Inox and Suzlon?
Not really tracked.
Okay. Shrikant, would you look at the charts maybe and tell us if you like a Suzlon or an Inox Wind or Inox Wind Energy?
Yeah, I think so. Like in that, Inox Wind is definitely having a lot of strength in terms of its technical pattern. No doubt that we have seen a spectacular rally from the lows of 180 to almost 525.30 without any correction. So in case if there is any correction, then I think close to 500 or maybe 490, the stock will again regain some strength. But it is now very close to, I mean to say, it has already broken its listing price. So whenever the stock crosses its listing price, and which was around some 500 levels in the year 2015. So Niraj, crossing this level is significant event for the stock. And the strategy should be to buy, or maybe I can say that something is really happening positive for the stock, and that's the reason stock has crossed this level. So in case if there is any correction, then certainly we should look for adding this stock, but eventually we are expecting stock to move towards at least 620 or 650.
Saurabh, IT has been seeing some buying again in the last few days. Earnings season around the corner with TCS reporting on the 11th. You think this euphoria is going to be justified? If you had to, would you firstly, would you consider buying IT stocks ahead of their earnings season? And if yes, which ones would those be? And if not, what is the view on the sector then at large?
See, my belief is gradually IT will see traction going in 2024. So our advice is gradually build a position in the IT sector. The first recommendation from our side is HCL Technologies. If you look at the numbers, the company have gained good traction in the last quarter. I mean, the deal with the Verizon, highest amount of deals signed by the company. Quarter on quarter, there was a jump in the 100 million, 50 million, 1 million, 10 million basket. The company is quite confident of the deal pipelines and working towards AI also with their clients. So IT and TCS remains our top picks.
Right. That's the view coming in. Shrikant, what about you? Technically on the charts, would you buy any of these IT stocks? Any long trades there? We've seen buying in the last couple of days in the space.
Yeah, so like in this space, based on technicals, we like Wipro as well as we like Tech Mahindra. Wipro has crossed its important level around 450, 455. And below that, it was like consolidating for several months. So crossing this level clearly indicates that the stock is heading for the next important level, which is at 500 and 520. But if the technical pattern goes as per the expectations, then we may even see the levels of 550 in the medium term. We also like Tech Mahindra because there also we saw a huge amount of underperformance as compared to its peers. And now the stock is consolidating and it is forming some triangle sort of formation. So here also we are expecting somewhere close to 1450, 1490 in next maybe few weeks or few months. So it will take some time, but it's a time to buy, to accumulate, to add more to the positional portfolio with a final stop loss close to 1200.
Okay, sorry, Shrikant, which was that stock? I missed it.
Mahindra.
Tech Mahindra. Okay, Tech Mahindra and Wipro. Watch out for those. Watch out for Zomato as well. We haven't discussed that stock today, but they've increased the platform fees from 3 rupees to 4 rupees in select markets. Remember, this is a net addition to the bottom line. I think CLSA, if I'm not wrong, has increased the price target to 168 or thereabouts. So Zomato is one more stock you need to focus on. And a stock that, again, we've not spoken about in detail, but maybe we'll talk about post-market open, is Wockhardt, because of the kind of frantic buying that we saw in the stock in the last few days, particularly yesterday. So both of these names is something that we'll discuss with our experts on the other side of market open. But here's how the markets are starting off. On a decent footing, I would presume. No, it's flat. Hardly any move there for the Nifty 50. bring up the banks, which had a bit of a pullback yesterday, about 0.25% lower right now. Let's wait and watch if there is more in store. Holding that 48,000 mark. Mid-cap index flattish. Small cap index would be interesting. The last few days it started off with a bang, about 0.33%, so actually not that bad for the small caps, you have to admit. Nifty IT is the last one that I want to see because yesterday it had a good move. Let's see if it is more, and then let's get the heat map up. Nope, for now starting off weak. Let's get the heat map and show you what's moving on the large caps before I hand it over to Samina for the broader end of the spectrum. More red than green. What's moving down? iShares is reacting yet again. It was down about 2.5% yesterday, down another 1.25%. There is weakness in Ultratech. The numbers weren't the best. We spoke about it on the trade setup. Not necessarily the best. Brokerages may move at the target to FY26, but the monthly numbers left a bit to be desired. Aside of that, maybe a bit of a weakness in Infi, HCL Tech, etc. So tech is not having a good start, as the Nifty IT mark showed as well. But now the greens are slowly starting to widen. Coal India, monthly dispatch numbers looked okay, 1% higher. There is strength in Nestle. There is strength in metals, by the way. I don't know if the dollar index impact continues, but metals are certainly having a good run. And now the quantum of stocks in the green are moving higher. It's almost even Stevens. So on a good note, let me hand it over to Samina to figure out what's happening at the broader end of the spectrum.
Couple of movers. So while the broader markets are largely performing in line with what was expected, let's quickly take you through a few stocks that we are tracking this morning. So pull up APL Apollo. They've had a little bit of a rough reporting in terms of sale numbers that they've projected for. So they reported those slightly below. They've attributed it to higher steel prices. And those are the sales numbers for the quarter. So the stock is feeling the pressure. It's down about 1.5% in APL Apollo. Contrary to what you're seeing in APL Apollo, the other player from the industry, JTL Infra, they've reported a stellar sort of numbers, right? And that's the stock. So 3.5% higher on back of numbers that have been the best ever historically for the company. JTL stock does 3.5% gains in trade. Gensol is a stock you want to pull up on your screen. The counter has been in the news for the last couple of weeks. This morning, of course, we've got reports that they are looking at fundraising plans. So remember, it is still the season of QIPs and IPOs. Gensol counters up 1.5%. 300 crores will be coming in. They will look to improve their balance sheet, improve the debt equity ratio, and also, of course, use that money to execute the order book that they're currently sitting on. So that's Gensol Engineering for you. Apart from that, auto numbers. So that sector will be in focus today. So you've got Maruti, M&M, and Bajaj Auto. You can add to the list the M&Ms of the world. Largely in focus, auto counters on back of their numbers. Numbers of most of the auto players have come in slightly lower than what analysts were expecting. But of course, for some of them, it'd be nice to understand if it's in line with what the management was expecting. But auto generally is seeing a weak sort of reporting coming in on the foot of the festive season that has actually come to an end. So M&M, TVS, Maruti, Bajaj Auto are all trading fairly soft in trade. That's largely what it is. Niraj, I'm going to toss it back to you. Auto is soft, but I think most of the other players are trading flat to slightly higher. Nothing to write home about just yet.
Just wonder if Zomato, and there's these brokerage notes that we spoke about as well. So what's happened from Elara as well as CLSA. So bring up Zomato, up about 2.45%, really strong show and a good start by this one as well. Quick opening thoughts, Mahantesh, on, and I will start off with Zomato. These players have seen a fairly choppy time since listing. The last couple of years, Zomato has really spiked on gains from the lows of 40. It's now not seeing any kind of ebbing. This platform fee increase, deeper penetration, etc. All of this, does it augur well? Is it a business that you would want to invest in?
Yeah, definitely. This is a business where the confidence of all these companies is growing, and they are able to charge the fees that they want. You talked of platform fees. There's also in-app advertising. So there is a lot that is happening on the company side. The penetration is now near complete. If at all, it will keep growing organically as we go ahead. But more importantly, their ability, the confidence that comes from their ability to charge what they want, is driving the stock prices up. I think that momentum is not going to remain unarrested, at least for 3-4 years before you have any strong competition. As it is, the market is now doesn't seem to have any competitive activity coming up as yet. So the pricing, therefore, has become unbridled. And in such a situation, the stock prices should keep seeing higher and higher levels.
Right. Just a quick mention, All Cargo Logistics, they go ex-bonus today, and the stock is looking pretty good, 9.5% high on a day when the Nifty 500 is actually trading flat. Alembic Pharma, that's the other one, 5% gains. Lemon Tree, this one's been on the radar too on a few upgrades. The counter trading well in the green, 4% on Lemon Tree is what we have. Niraj just talked about Lupin, and we saw very aggressive buying that came in yesterday towards the last hour of trade. The gains, Niraj, you want to come to this one? This is fantastic. After a pretty good move yesterday, 5% still. I don't know how further away is the target price on this one. For all you know, with that 10% movement in yesterday and today, we might have taken out the target price on Lupin as well.
No, so I'll tell you. So, Samina, since you've raised it up, so these Nomura's target price is 1593 on Lupin.
We still have a good runway to go. So
if Nomura's target is to be believed, yes.
Yeah, so about 1500 on Lupin is what Nomura's put out. JBM Auto, we talked about this as well. 14% high yesterday, new 1-year high. The stock continues to gain 4.5% today. Zomato, you've talked about, but pharma as a pack, Niraj, is looking good. So you've got your Lupins, but even Glenmark continues to gain in today's trade. Fertilizers are also not doing too badly, actually, interesting enough. Saurabh, anything in the pharma pack? I mean, that upgrade on Lupin has sort of ignited the sector. Across the board, we are seeing buying this morning, follow-on buying after yesterday, last hour of trade. Anything in the pharma pack that you're constructive on that one could still add at these levels in their portfolio if you want exposure to the pharma pack?
I think latest one we recommended is Syngene from the pharma.
Syngene from...
It's looking good, and the potential upside is close to 15-20%.
What's the rationale for that, Saurabh?
See, the company is doing well in the research domain, and the pipeline is looking very good.
Listen. Okay, great. Saurabh and Mahantesh, take a moment to thank both of you for joining in today and giving us your thoughts. Really appreciate your time today.
Thank you.
Thank you. Shrikant, come to you. Opening thoughts, 7 minutes into trade. Bank Nifty, Nifty IT, anything that stands out for you?
Niraj, I think the way there was we saw some activity in pharma companies, but today a couple of stocks are really doing well. They are very close to their important levels. No doubt that this particular sector is a defensive sector, but most of these stocks, if you see, like Cipla is now very close to its all-time highest levels, and if it crosses 1280 levels, then we can even see the levels of 1400 or 1450, which is the fair value for most of the broking companies. Also, if we go through with Sun Pharma, then it is trading above its all-time highs. Zydus Life is also trading in the lifetime high levels. So I think this particular sector is definitely going to do well, and we should focus more and more on stocks like Lupin, Zydus, Sun Pharma, as well as Cipla. But from the Bank Nifty, I think it is clearly underperforming. It is going to find some furthermore selling pressure if there is any rally from current levels, because 48,500 is going to act as major resistance for it. And in case if it falls to 47,000 levels, then I think there the Bank Nifty is having excellent support. Or at least we need the correction in the market up to 20 days simple moving average, which is around 21,500 for Nifty and 47,500 for the Bank Nifty. So if we see these levels, then I think the market will start stabilizing. Otherwise, at higher levels, the risk is there. We are going to see some selling pressure, because the way yesterday it has fallen in just 20-25 minutes. One thing is very clear, that someone has taken a lot of I would say someone has taken good profit in the market, and maybe that's the reason 21,850 is now going to act as barrier, and 21,500 or 400 is the area where we should look for taking some contra bets in the market. So for the time being, it is more try to focus more on the defensives like IT and pharma companies, and it is better to stay away from these large cap companies.
Shrikant, you mentioned pharma, a bunch of stocks. I'm inclined to ask you about Wockhardt Pharma.
Yeah,
it's had a massive run in the recent past. What do the charts say here?
Yeah, it is turning positive after a very long time because the stock was consolidating. It has formed some double bottom sort of formation on weekly, monthly basis. The stock is now very close to this 477, 480 levels where it was in the year 2021. But if we see the entire pattern of the stock, then it was around some 2000 levels. From there, all the way the stock has fallen to nearly 150 levels. But most of the time, all these large cap companies or big size companies, whenever they falls to their extreme levels, they form some formation like double bottom or maybe triangle sort of formation. And this particular stock has formed double bottom formation. Based on line charts, I think the stock has crossed its important level of 450. So now the next level to watch out for would be 500, 520. But based on candlesticks or bar chart, still it has scope to move up to 750, where it will validate to the formation. So based on the entire formation, volume, price pattern, I think the stock is heading higher, and any dip from current levels will be an opportunity for traders as well as positional traders to create some long positions. So 450, 440 should act as very good support for it, and 750 is the ultimate target that we are seeing based on technicals.
One stock that's been on the radar on back of business restructuring has been all cargo logistics. We saw a big run in the last 10 days. I think the counter is up some 40-50%. Today as well, 17% higher, on or 15% now. Have you track all cargo logistics, all cargo Gati at all?
Yeah, I think, see, all these logistic companies are showing some strength. They were like consolidating since last almost 1 year. But now, after hitting the lows or maybe crucial supports, now again they are rebounding back. So maybe in the year 2024, we are going to see further more activity in all these logistic companies. That's the overall view. Yes, we also like all cargo logistic, which is currently around after the bonus 94, 95. But I think it is heading higher. It is going to cross its previous high. We also like Aegis Logistic, which is around, which is trading somewhere close to 350, 340. And there also the stock is forming some confident pattern. So at current levels, certainly it's a buy around 350 because it was around some 400 levels. So all the way now it is corrected back to 350. The stock is having great risk-reward ratio. So it's a buy at current levels with a target of again 400, 425 on the high side. So we like logistics. Right. Mahindra Logistic also looks good. Mahindra Logistic also looks good. There also we are seeing some rounding bottom sort of formation.
Interesting, Shrikant. If not all cargo, we've got Mahindra Logistics and Aegis Logistics that Shrikant is constructive on. Thank you, Shrikant. Great having you today on the show. The market, like we said, has started off on a sort of flat to slightly negative open. Broader markets, though, not doing too badly. Lots of stocks that are moving on the street, which we've highlighted a few of them already. But pharma is your top gainer. Fertilizers are still seeing some buying. Stocks like all cargo are turning out to be your top gainers in trade. APL, Apollo. If I can just quickly pull that up and see if there is a reaction to those quarterly numbers that came in. The stock remains down 2.5%. Zomato is gaining on a brokerage upgrade. You've also got JTL that's gaining on back of a pretty solid sales number for the quarter. But moving focused from micro to a little more macro in terms of targets, the year has kicked off and brokerages are rolling in with their targets on the Nifty. Citi has come out with a note where it believes that they see the Nifty at levels of 22,500 being taken out by December 2024. Agam, what does Citi have to say? They think, what are their thoughts on valuations? Because the larger topic that we've been discussing is how the broader markets are now looking very frothy.
Yeah, so this is a Citi strategy note, and they're actually talking about what they expect from the markets and all the areas that they are cautious about and all the areas they would, in fact, go ahead and place bets. I'm going to start off with their assessment of 2023, which, of course, was a staggering year. And they have said that a lot of those gains were on account, largely, because of domestic flows which came through. Of course, FIIs were also a part of that. And we had decent earnings as well, which continued the momentum on the upside. At the moment, Citi has set a level as far as the Nifty is concerned by December end of around 22,500. The thing is, it's not very far from current levels. It's just about a 4% upside from current market levels. And the question is, where do we go from here? So as far as Citi is concerned, looking ahead, they're keeping a price to earnings ratio of somewhere around 20.5. They're also expecting its EPS to grow by as much as 14% on a year-on-year basis in FY25. And their estimate for FY24 is 17%. So sure, double-digit growth for EPS, but based on the 20.5 times the price to earnings, that is well above the one standard deviation mark if you consider the Nifty price to earnings 5-year average. And that means that only 15% of the times in the past has the Nifty traded at such a premium in the past, at least in the last 5 years. The question really is, if you are going to be circumspect with respect to the Nifty, what areas are you going to place your bets on? So Citi does maintain that continued flows will continue to keep your mid-cap and small-cap indices are higher, and they'll continue to be buoyant. However, as far as their point of view is concerned, they like the large-cap space more because it offers a better risk-to-reward ratio. Based on that, what are the sectors they're betting on? So they are overweight when it comes to your PSU banks, something like defense sector, along with industrials as well, and of course not to forget BFSI. They are, however, underweight on something like discretionary, IT and metals. So circumspect when it comes to IT as well, which is a significant part of the indices. That said, in terms of some contrarian bets that they're playing for, they do like HDFC Bank, Cipla from the large cap universe, and of course some from the relatively smaller names. Devyani International, Indus Towers and Endurance are some of the other bets that they are bullish on. But on the whole, as far as the markets are concerned, they're just posing a question of whether or not, in fact, valuations are full at this time.
Right, Agam, thanks for that. That is, of course, Citi's strategy note being put out there. 22,500 is what they're looking at as a target for December 2024. Still constructive on counters like HDFC Bank and Devyani International. We'll take a break. We'll come back. The focus remains on the auto sector. Bajaj Auto, remember, reported numbers. Rakesh Sharma joins us to talk about the December sales and the outlook for the company going ahead.